Okay, you're welcome to today's class. So today we are going to look at withholding tax. Withholding tax actually is that tax that is deducted at source. It is that tax that is deducted at source. It is that tax that is deducted at source. Now, withholding tax is deducted at source from the payment made to a taxable person for the supply of goods and services. Now, on the other hand, withholding tax is an advance payment of tax, which actually can be used to set off as a tax credit from the tax liability of the company at year end. Examples of such withholding tax that can be used as a set-off are withholding tax on royalties, withholding tax on commission, withholding tax on technical and management fee, withholding tax on professional fees, withholding tax on contract of supplies, withholding tax on different can be used as an advance payment of tax. In some cases, withholding tax are deducted at source and can be final tax in the hand of the recipient. What this means is that such income, once withholding tax are charged on them, no other tax can be charged on them. They are not subject to further tax. Example of incomes that withholding tax on them are final are interest and dividend. So when you receive dividend or interest, the withholding tax is deducted from it, and this interest of yours and dividend will be treated as final tax. So that is that for that. So we have distinctive feature. The taxpayer has no option to pay it because the person making the payment has an obligation to deduct it. So one thing about withholding tax, like for example, withholding tax on rent. The person who is paying the rent to the landlord is meant to deduct withholding tax and pay the landlord the remaining. Good. Now, objectives of withholding tax: it discourages tax evasion. You are not the one that will pay. The person who will pay you will deduct the withholding tax and is the one that will remit it. So with this, tax evasion is discouraged. It increases tax base of government. So withholding tax helps to increase the tax base of Nigerian government. It serves as a collectible mechanism. So it's self-collecting, it's self-assessing. Withholding tax administration are done by the two tax bodies, Federal Inland Revenue Services and State Inland Revenue Services. Federal Inland Revenue Services collects withholding tax that are due to companies, while State Inland Revenue Services collect withholding tax that are due to state government. I hope that makes sense to you. Income applicable to withholding tax. Now, royalties. If a royalty is to be received by an individual, the withholding tax is 5%. If company, it is 10%. If rent is to be received by an individual, it is 10% by an individual and 10% for a company. Interest, if it is received by an individual, it is 10%, and dividend, it is 10%. Director's fee, 10%, 10%. So that is that for that. So once the recipient is an individual, that determines the rate to charge. So you have to master this rate for your OBJ questions. So move down to filing of withholding tax. The correct amount shall be applied on the correct rate shall be applied on the payment. The correct income shall be applied on the payment or transaction, and a check is raised in the name of FIRS. So and you must file your withholding tax within 21st day of the succeeding month. If you fail to do this, you face penalties. Withholding tax, on the other hand, after being paid in a collectible bank, in fact all the banks are collecting banks of FIRS, you will now get your receipt, which is a printout, and also your teller duplicate. You will now fill a schedule of the names of persons and addresses and transactions and all that, and the rate. After you fill this schedule, you attach the receipts printer, the pay direct online printout. You also attach your paying slip, FIRS paying slip. You now upload it on the FIRS portal, after which a receipt will be generated for an acknowledgement. Credit note. Once payment for withholding tax has been made, a credit note shall be issued. This credit note will be issued to the person that paid the withholding tax, and he will now give it to the person upon whom the withholding tax was deducted. For example, if Mr. A paid the withholding tax, like if Mr. A and B had transactions that are subject to withholding tax, Mr. B is paying money to Mr. A is paying money to Mr. B, and that transaction is subjected to withholding tax. For example, Mr. A is paying interest to Mr. B. Mr. A is meant to deduct withholding tax, and upon the deduction of withholding tax, Mr. A is meant to remit this withholding tax accordingly, and the credit note will be issued to Mr. A. Mr. A is now made by law or required by law to give the credit note to Mr. B, upon whom the withholding tax was charged. Then Mr. B will now use this credit note to claim tax credit at the end of the year. Penalties. If you fail to remit or deduct withholding tax, for example, that's Mr. A and Mr. B, the transactions involve Mr. A paying Mr. B, and that transaction is subjected to withholding tax. Mr. A is meant to deduct and remit withholding tax. If Mr. A fails, he will pay 10% per annum for the amount not deducted or remitted to FIRS. That is what you will pay. 10% per annum for 10% per annum of the amount not deducted or remitted to FIRS. 5,000 for late remittance or non-deduction of withholding tax plus the amount of the withholding tax itself for to SIRS. So that is that about withholding tax. It's a short topic and doesn't have question, but OBJ question comes out very well here. So try and master it. The notes has been uploaded, and I expect you to read them. Do have a nice night.